Hello, welcome to this FinGraphs for OANDA webinar, Introduction and Methodology. I'll let you read this disclaimer before we start. Management Joint Trust, the editor of FinGraphs for OANDA, was founded in 1969 in Geneva, Switzerland. Our company hence has 45 years of experience in investment advisory and related tools. During the 1970s, the charts were crafted by hand, and our first financial graphics platform was brought online in 1984. Welcome. My name is Jean-François of Zarzac. I'm Head of Business Development and Education at FinGraphs. I hold a Certified Financial Technician, CFTE, delivered by IFTA, the International Federation of Technical Analysts, and I am also a Financial Risk Manager, FRM, delivered by US GAAP, the US Global Association of Risk Professionals. I've been advising institutional clients as well as educating private clients for over 10 years. In this video, we will briefly introduce FinGraphs for OANDA. I'll quickly walk you through the functionalities on the website. And we will review the markets in 3D methodology using market examples. Most of these are going to be longer term so that you can relate to them. Please understand that I will have to stick quite close to the charts and not express any subjective opinions. FinGraphs for OANDA is a new and innovative financial graphics platform. It has been tailor-made for OANDA's clients and is accessible on the email address you can see here, fg40.com. As part of the FinGraphs promotional launch, FinGraphs for OANDA offers an array of interesting trial proposals. I'll let you discover them on our homepage. You could discover the FinGraphs for OANDA methodology through a series of introductory videos. An introductory video, how to spot long-term trends, how to trade short-term trends, how a buy-the-dip strategy works, and how to avoid the traps in bottom fishing. You also have a didactic user guide available on FinGraphs for OANDA. It focuses on the FinGraphs methodology, its indicators, as well as has a frequently asked questions section. All OANDA's covered instruments are available for analysis on FinGraphs for OANDA, on frequencies ranging from 1 point every week to 1 point every 5 seconds. There are more than 90 currency pairs. Precious metals include gold, silver, platinum, and palladium. There's also a wide array of CFDs, which are available in markets outside the US for OANDA's clients, but are available on the FinGraphs for OANDA platform. FinGraphs for OANDA also integrates OANDA's FX Trade Now widget to trade alongside the charts. It is available as a pop-up next to each chart. It's the green button here. So you just have to press on it, enter your login details, and the FX Trade Now widget will pop up, and it will synchronize with the instruments you're viewing on the platform. FinGraphs for OANDA is a web-based platform. You don't need to download anything. You don't need to install any plugins. But for optimal navigation comfort, please use a recent browser. So let's go into the methodology. 3D graphs. FinGraphs presents charts over 3 investment horizons. Long-term, which you can see in the left side time box, and which is also posted in the summary box above. The summary box is to put the various frequencies into perspective. So you have a long term, a medium term, and you can see the time span of the medium term versus the long term, and then the short term, which is this small box here put into perspective of the medium term and the long term. It delivers an at-a-glance view of how market trends interplay. And the at-a-glance word is quite important. We don't want you to overanalyze the FinGraphs charts. It is an at-a-glance analysis. Must be intuitive. It is inspired by Charles Dawes' second basic principle. Charles Dawes is the grandfather of technical analysts at the beginning of the 20th century. The market has 3 trends: primary, secondary, and minor trends. It makes no sense to present a very long-term chart next to a very short-term chart. For example, a weekly chart next to a 5-second chart. So at FinGraphs, we have tailored a set of combinations which adapt to your different investment profiles. For medium to long-term investors, there's an investor's view. An investor's view helps you position yourself for the next quarters with the weekly chart, for the next months with the daily chart, and for the next weeks with an hourly chart. For traders, there's a trader's view. A trader's view helps you position yourself for the next week with the 60-minute chart, for the next day with the 15-minute chart, and for the next hours with the 4-minute chart. A trader's view is adapted to someone that looks at the screen maybe 2-3 times a day, wants to gain a weekly perspective for his trading strategy, wants to check his daily position with the 15-minute chart, and wants to identify intraday turning points with the 4-minute chart. For day traders, there's a scalper's view. A scalper's view helps you position yourself for the next hours with the 4-minute chart, for the next hour with the 60-second chart, and for the next 10 to 20 minutes with the 15-second chart. A scalper's view is for traders that do spend quite a bit of time in front of the screen, want to position themselves during the day, during the next hour, during the next minutes. Finally, for intra-hour traders, there's a super scalper's view. A super scalper's view helps you position yourself for the next hour, 60-second chart, for the next 20 to 30 minutes, 15-second chart, and for the next minutes, the 5-second chart. The super scalper's view is basically an extension from the scalper's view. It is meant to deliver a very short-term trading environment on the 5-second chart. So what's your investment profile? And that's probably the first question you must ask to yourself when you use FinGraphs. See what other FinGraphs for OANDA users are using. The statistic was done during the 20th of May and the 18th of June. What you can see is that most were looking at trader's view, meaning gaining a weekly perspective, checking their daily position, and then looking for intraday turning points. About 20% did go to fetch a longer-term perspective with the investor's view. About 20% were intraday traders, and then 13% were monitoring the super scalper's view real time. Choosing your specific view probably depends on the time you could actually spend in front of your screen, on your trading style, as well as probably on the spread applied to the various instruments you are viewing on the platform. So let's go into the indicators. First of all, trend identification. Again, trend analysis at a glance. This is a trader's view taking a few weeks back on Euro US dollar. We'll go into the live examples in a few minutes. So the 60 minutes is in a bull, the 15 minutes is in a bear, and the 4 minutes is in a bear. So potential uptrend, potential downtrend, potential downtrend. These potential trend indications are derived predominantly by analyzing the direction of the FinGraphs for OANDA larger envelope. So the dark yellow standard deviation envelope, when it's pointing up, when its direction is pointing up, it is a potential bull, labeled think positive. When the dark yellow larger envelope is heading down, it is a potential bear, think safety. So bull for potential uptrend, bear for potential downtrend. On this trader's view of Euro US dollar, long-term bull on the 60-minute chart, medium-term bear on the 15 minutes chart, think safety. Shorter-term bear on the 4-minute chart, think safety. FinGraph delivers an automatic summary of these trends and how they interplay in the 3D markets positioning box. This 3D markets positioning reads potential consolidation period and an uptrend, meaning the long term is heading up and both the medium term and the short term are potentially in a downtrend. You could pop up a more detailed explanation, a more verbal explanation, by clicking on the explanation button. So there are 3 frequencies, so 8 standardized combinations. If you have 3 bulls, you're in a potential continuous uptrend, and vice versa in a downtrend. If both your long term and your medium term are in a bull, but your short term is in a bear, we label it a potential intermediate top in an uptrend, and vice versa in a downtrend. If your long term is in a potential bull, but both your medium term and your short term are in potential bears, you're in a potential consolidation period in an uptrend, and vice versa in a downtrend. Finally, when your long term is in a potential bull, and you had a potential consolidation period over the medium term, and your short term is in a potential bull again, it's a potential resume uptrend in a consolidation period, and vice versa for the downtrend. So let's go into the live examples. This is the chart of Euro US dollar on an investor's view taken this afternoon. So in a weekly, so we counted in quarters here, in a weekly potential bull, potential uptrend. We're in a daily, we counted in months here, in a daily potential bear, potential downtrend. And now we're in the hourly, counting in weeks, and we're in a daily potential downtrend. The summary is we are in a potential consolidation period in an uptrend. Let's look at the trader's view. So we were on the investor's view previously, now we're moving to the trader's view. The 60-minute chart is in a bear and a potential downtrend. The 15-minute chart is in a bear and a potential downtrend. And the 4-minute chart is in a potential bull, potential uptrend. The 3D positioning box is labeled potential intermediate bottom in a downtrend. Downtrend, potential intermediate bottom in a downtrend. I'll move on in a few minutes to explain the targets. Dollar yen, over an investor's view again, long term. The weekly, counting in quarters, is in a potential uptrend. The daily, counting in months, is also in a potential uptrend. The hourly, counting in weeks, is also in a potential uptrend. All three potential trends are in an uptrend, a potential continuous uptrend, labeling on the 3D markets positioning box. This is at-a-glance analysis of trends. Gold. Gold is in a weekly potential downtrend, counting in quarters, is in a daily potential uptrend, counting in months, and is in an hourly potential downtrend, counting in weeks. So we're in a potential resume downtrend in a pullback period, a rally, in the context of a weekly downtrend. For the Canadians that might be on this conference call, US dollar, Canadian dollar, investors view, weekly potential uptrend, daily potential downtrend, hourly potential uptrend. A potential resume uptrend in a consolidation period. Now let's move on to price, to estimated price targets. FinGraph uses recent volatility as the basis for its possible target calculations. It is proxied by the width of FinGraphs' larger standard deviation yellow envelope. We label it delta. Whatever the instrument or its frequency of observation, volatility is a possible guide as to the amplitude of potential price moves. High volatility means amplitude, hence larger potential. A lower volatility or a smaller delta means less amplitude, hence reduced potential. This methodology is applicable to all instruments and all frequencies at all times. There is no need to analyze each specific price move or pattern to do it. Just use the delta. FinGraph gradually calculates first corrective and then impulsive possible targets. Once a trend has turned, it is first labeled as a correction up or a correction down. When it has traveled a certain price range, and we have a trigger point, which we will explain in a few seconds, so when it has traveled a certain price range from its turning point, so its turning point is here or here, then it becomes an impulsive price move. So it moves up in the corrective territory, goes through a certain trigger point, and then turns impulsive. It moves down into as a correction, triggers a certain trigger point, and then becomes impulsive. Let's look at it in detail. Once a trend has turned up with potential bull, FinGraph first identifies the last important turning point. So you can see it here in the theory and in practice. This is cable on a daily taken during 2013. The explanations that will follow are for your own knowledge. FinGraph calculates the targets automatically. FinGraph first identifies the last important turning point. It is often but not always the minimum of the chart. If the price move has traveled less than 0.8 times delta, as you can see here in the methodology box, and you can see it here on the chart, it calculates corrective targets. So minimum price plus 0.5 to 0.8 times delta. Price targets will remain corrective up, labeled C up, as long as price haven't traveled above the 0.8 times delta. We've been using this 0.8 factor of delta since the early 90s. Or as long as the potential trend remains in a bull. So as long as price haven't traveled above 0.8 times delta, or as long as the potential trend remains in a bull, it is still labeled correction up. Once a price move has traveled up above 0.8 times or delta, an impulsive move up is triggered. So a more robust, confirmed move up with more potential. It corresponds to impulsive targets. These are calculated as minimum price plus 1.3 to 1.7 times delta. Once price targets have been achieved, these are labeled done. Impulsive up done. The calculated potential is exhausted for now for this frequency of observation. So here the daily on cable, early 2014. The next step is either a correction down, or in rare occasions, when a price move is very strong and robust, FinGraph calculates an impulsive 2 target zone. So these are very aggressive tentative targets, and they are minimum price plus 2.3 to 2.7 times delta. E2 targets are very aggressive. They're strongly extended moves, and they're the maximum targets that we will calculate. We do not calculate I3 targets. Similarly, downside targets are calculated in a similar way. From the last important turning point to the downside, it is often but not always the maximum of the chart. So you have a corrective target down example here, an impulsive target down example here. It's interesting to put them into perspective because you can see that we also adapt the time length for the estimated price projections if they are corrective or impulsive. So a corrective price move is shorter than an impulsive price move. These time lengths are adapted to each frequency of observation, from a weekly to a 5-second chart. Hence, we could offer a price target estimate which has both a time perspective and a price perspective. Finally, when no targets appear on the screen, the trend algorithm and the targets algorithm are in desync. This is a confirmation. Both algorithms are not exactly the same. It is a sign of a transitory, neutral situation. It often happens when prices make a sudden move. Then the estimated price targets will be adjusted quicker than the trend, because the trend relies on the direction of the wider standard deviation envelope, which is quite a slow indicator. So let's look at it with the examples, the same examples as before. So this is again the euro-US dollar on an investor's view. So the weekly chart, we can see that the move, which started in mid-2012, is in a potential uptrend, but at the moment it's only a correction up. In terms of price targets and time targets, it is pretty much done. And now the weekly is looking for direction. In order to create an impulsive move to the upside, it would need to move above 140.3390. But until that happens, the correction up is done, and you have the risk of resuming the downtrend. Bear in mind that a corrective move is not a robust and strong move yet, even if we're talking very long term here. Then let's look at the daily. Well, not surprisingly, the daily has started to head down again. The corrective targets on the weekly were finished, and now the daily is in a potential bear. The potential bear, just about 10 days ago, moved below its corrective targets, which were at 134.90, and is now showing impulsive targets in a range between 132.64 and 130.58. So there's maybe 2 to 4 figures still to go. And as you can see with the price projection, this should happen over the next couple of months. Just going to check if there are any questions yet. No. Then the hourly, counting in weeks. So this is the hourly chart. It's in a potential downtrend, a bear, and the targets have pretty much been achieved. So at the moment, although it's still in a potential bear, the move is potentially exhausted over the next week or so. So if we summarize it, we're in a weekly correction up, which has been achieved. We're in a daily impulsive move down, which still has some potential. And the hourly has moved down since early July and has come to a point where its potential is fulfilled. Now, Euro US dollar on a trader's view, so the shorter term chart. The 60 minutes, so the perspective over the next few days, over the next week. There we go. So it's in a potential downtrend. It's in an impulsive move down, and this impulsive move down has been done. So over the next days, over the next days to a week, the potential seems exhausted. The 15-minute chart is also in a potential bear. It went into an impulsive 2 target, so a very extended move. This has been a strong sell-off and has also come to reach its targets. So it is also potentially exhausted. And the short term, the 4-minute chart, which will give you a perspective over the next hours, has started to turn up, and it has even made it above its corrective target. So it's now an impulsive move up. So this was this afternoon, which could lead you up to 133.80 in first instance. Now dollar yen over an investor's view, so a long term. So also in a potential bull, and also in an impulsive target, and the impulsive target is close to being achieved. So bear in mind we counted in quarters here, so it might be a few more quarters. And the potential is up to 109. So we're at 102 at the moment. So on a longer term perspective, it's still on an uptrend, but there's only about 7 more figures to go. It may be a lot, but it's also a long-term perspective. Now the daily. The daily had been in a correction up to very recently, and it never triggered a correction down, sorry, and it never triggered an impulsive move down. The envelopes just turned up again, and it's showing an impulsive target up. The time frame is pretty short, but there is potential here up to 104 to 106. And finally, the hourly. The hourly is also an impulsive move up. It is in a correction at the moment, but should resume its uptrend to reach 102.80 to 103.34 over the next 1 to 2 weeks. So to summarize it, the weekly is in a potential uptrend, still has a bit of potential. The daily is in a potential uptrend and still has some potential, and the hourly is in a potential uptrend and still has some potential too. Gold. The weekly is in a potential downtrend and impulsive move down. It actually turned impulsive just at the end of the first quarter 2013. It has been in an impulsive downtrend since, and it still has some price potential to the downside between 9.30 and 11.51. So the potential downtrend, if we look at the targets here, the possible price targets, doesn't seem to be over, and there's more time and price potential to the downside. The daily is in a potential bull, and there are no targets at the moment. So this means a neutral situation. The daily had been in a correction up, and the targets recently disappeared, and it's now looking for direction. And the perspective of a long-term downtrend, it may mean the end of a correction period up. The hourly is a potential downtrend. It has pretty much fulfilled its targets, impulsive down, and is correcting up at the moment, but the envelopes are still heading down. So it's not a confirmed reversal yet. So still in a long-term downtrend with potential, a daily following a correction, a neutral situation, and the hourly is pretty much exhausted in its downtrend, but hasn't turned or hasn't initiated a correction up yet. Dollar Canadian investors view. The weekly is in a long-term, sorry, I'll just get the zoom up here. The weekly is in an impulsive uptrend with some price potential and time potential left. The daily is in a correction down, which is over, which has been done. Prices are moving up again, but the trend analysis doesn't confirm it yet. The hourly has been heading up and has reached its impulsive potential. So it's exhausted over the next week or so. Now, trend identification and target estimates are the core of the FinGraphs methodology. We like to position it as the trend is your friend and lead you into respecting these trends as much as possible. We don't want you to go into too much top fishing and bottom fishing. And by having the trends in front of you at a glance, it will avoid you some wishful thinking. Now we do have mean reverting indicators, which are our risk indicator and our price exaggeration indicator. They are used to monitor exaggeration and confirm exhaustion. So monitor exhaustion and exaggerations. With FinGraph, market stress and risk indicator. So market stress is what we call the price exaggerations, and the risk indicator, which moves from overbought to oversold. As said, the trend is a very important element, and so to be able to act or to consider a position on the basis of these mean reverting instruments, it's very important to have them as synchronized as possible, especially if you're using them against a strong impulsive trend. So first, market stress. Market stress is defined when both envelopes touch each other. So when the shorter term price move, the white envelope, has gotten ahead of its longer term average, the yellow envelope. So this is a market stress point to the downside, and you can see several market stress points here to the upside. When in market stress, prices are in exaggeration. The possibility of a rebound or a reversal is increased. In a steep downtrend, a first point of market stress usually triggers only a temporary correction. It will take more than one market stress to actually turn a trend. They will mark a first temporary correction, a temporary exaggeration. Strong accelerations can be very resilient. To be on the safe side, it is often better to wait until the small envelope has started to settle or turn. This is especially true, for example, when on very short-term frequencies you have a news effect and the market shoots up or down. You really have to wait till the smaller envelope starts to settle. It often takes 2 or 3 market stress points and a flattening larger yellow envelope to reverse the trend. Similarly to the downside. The risk index is FinGraphs' version of a momentum oscillator. It measures price levels compared to their recent history. The risk index oscillates from oversold to overbought and from overbought to oversold. It is parametered to be synchronized with the standard deviation envelopes and market stress, and hence serves as a confirmation for these exaggeration points. The risk index may remain in exaggeration for some time, as with momentum oscillators. Hence, theoretically, to be on the safe side, wait until it leaves the overbought or oversold zone to initiate a counter-trend move. The risk index may experience several tests or near tests before it changes direction. These will trigger a reaction, but possibly won't always turn the trend. As with market stress, it may mark only a temporary correction. Trend directions should take precedence. So let's go into our analysis again. So correction up, potential bull. And we can see the risk index has gotten almost into the overbought territory, is now reversing down. In a correction, it's fairly rare that we make it up to the overbought zone. So a reversal of trend quite high in the spectrum is already a sign of reversal, because it's only a correction. Now the daily. The daily is heading down, and we see an initial market stress and the risk index in oversold. This is a potential setup for a temporary correction up. Now it's only the first market stress, so it's most likely to be only a temporary correction, and the risk index really needs to start turning up and ideally make it above the oversold zone to confirm it. Now the hourly. The hourly is in a potential bear. Its objectives have been done, and it is on a second stress point, and it is also in oversold territory. We cannot confirm the reversal yet because the risk index is still heading down and hasn't made it above the oversold zone, but it is getting to a point where there's quite a bit of exhaustion. As you also see, the risk index and the market stress is the most subjective part of the analysis. And often, if you have a stress situation here, and you're not quite sure it's confirmed yet, a good idea is always to turn to the shorter term view, so the trader's view. So this is what we're going to do now. So on the trader's view, the 60-minute chart is also entering a market stress position and an oversold position. Again, it hasn't reversed yet, but it's also exhausted, both in terms of price targets, in terms of market stress, and in terms of being in the oversold. Similarly, the 15-minute chart is also exhausted. It even went and reached its I2 targets down. The risk index has started to reverse up and has made it out of the oversold territory. We have had market stress synchronized with it. It was a second market stress. So this is an interesting point to consider a correction up. And the hourly is already heading up. And at the moment, there's no market stress. When prices move out of the smaller envelope, it is not a robust sign enough to indicate an exaggeration. The risk index is still in the middle of the range, so it's not an exaggeration either at the moment. Dollar yen. Dollar yen, as we saw, is still heading up, has a bit more potential over the long term. And as you see, the risk index is well in the overbought, but it hasn't turned down yet. We have an initial market stress. We're probably close to a second one, but we're counting quarters here, so we're not quite there yet. The daily. The daily is heading up again. No risk index exaggeration, no market stress. So no exhaustion or exaggeration at the moment. So still in an uptrend and still has some potential. The hourly had an important intermediate top here, important in the perspective of the hourly, with a synchronized market stress and a risk index in the overbought. It has been turning down from the overbought territory, but the long-term trend is the impulsive move up is still valid and still has some potential. So we would label this an intermediate correction for now. Finally, gold. So gold is in a potential bear, impulsive down. The risk index is well into the oversold territory, but we have no market stress confirmation at the moment. We had an initial market stress back in December. We had a correction up, but now it's in the middle of the range. So we would trust the trend, which is still in a potential downtrend. The daily is neutral. The prices are in the middle of the range. The risk index is in the middle of the range. Exhaustion on the hourly in a potential bear. Several market stress points. The risk index is well in the oversold, has started to turn up. Not quite a confirmation of a reversal yet, but in a good level of exhaustion. Finally, the Canadian dollar. In a potential bull, still in an impulsive up. We've had market stress and risk index in exaggeration earlier this year, leading into a correction. At the moment, the risk index never really made it out of the overbought zone. So we're still in an uptrend, and it seems like prices are moving up again, and the impulsive targets are still valid. The daily in a correction down, no market stress at the moment to the upside. The risk index is very far from the overbought territory. It's also interesting to see that it came quite low in this correction, so bringing support. So the correction down is done. We're still in a downtrend, but we may soon be switching to a resume uptrend. The hourly is in a potential up, in an impulsive move up. The impulsive move up has been done. Not quite I'd stress yet, but pretty close. Very much in the overbought, but it hasn't turned yet. So although we're in very much of exhaustion, we cannot confirm an intermediate top at the moment, or not yet. Now, all the theoretical elements we just went through are available in our user guide. And you could also, in the indicators section, bring up a one-page overview, which you can print out and leave on your desk. It goes over all the methodological elements that we reviewed. So the three time dimension graphs, the trend identification, the target estimates, the risk indicator, and the price exaggerations. I just wanted to take a bit of time to go over further functionalities that we have on the FinGraphs for OANDA website. You could also, from the directories, view several instruments on one page in a mosaic format. So this, for example, is a daily mosaic of dollar pairs. So you can see that at the moment, Australian dollar is still heading up. Euro has started to, or has accelerated down, still has some downtrend potential. Sterling is exhausted. And the New Zealand dollar is only in a correction for now and has not accelerated in impulsive mode yet. Similarly, the Canadian dollar is still in a correction down and has not moved up again, but the dollar Swiss has broken through its corrective targets and is heading up into an impulsive mood. This is a great instrument to gain perspective of how the various markets interplay. You could also view it on a very short-term basis, for example on the 15-second chart. This is a great instrument to use when, for example, you have a news impact. You could watch all the currencies update live on your screen. So, for example, over the short term, the Australian dollar was already in an uptrend. The euro created a new impulsive up move. This was this afternoon. Sterling was also an impulsive up. New Zealand had kick-started it and was in a correction, probably moving up again. And you can see the Canadian dollar had already started to reverse, and the dollar Swiss was in a correction down but had not accelerated to the downside yet. Finally, you could also go into our private selections of functionality and create your own selection of instruments, your favorites list. And you could view it also in a mosaic format. You could view 4 to 16 instruments on one screen in mosaic format. So here, for example, is what I would use to gain my daily perspective on the various markets I follow. This is a 15-minute chart, so it pretty much gives me the perspective over the next 24 hours. So here you had, and this was this afternoon again, you had Euro US dollar heading down, Sterling heading down with still a potential, but the Australian dollar and New Zealand dollar had already started to turn up. Canadian dollar had already started to turn down. It seems like a lot is probably dictated by the rally we had this afternoon in gold. And you could also see that silver is lagging gold in this move. Finally, if we go back to our trader's view of the Euro US dollar, and we zoom in on the chart, so and I'm not quite sure your system is following, but now it is. So if we go back to a trader's view of the euro and zoom on to the 4-minute chart, you could press on the zoom and get the 4-minute charts. And if you see here, you have a candle button. And if you press on the candle button, you could superimpose the candles with the FinGraphs analysis. FinGraphs will give you your trend positioning, will give you your target estimates, your potential targets and estimates, and will also give you your position in terms of price exaggerations and exhaustion. This positioning is very well completed with the short-term a trigger point that candles can provide. We're not candle specialists, so I'll let you look on the internet about the candles methodology, but they could be a very good complement to the FinGraphs analysis. And just to finish off, we could see that we had an inverted hammer here, but it needs a downside confirmation, which never came, dodgy, and then the price moved back up to reach the 133.80 and seems to still have some potential up. Now, if you have any questions after this presentation, you can go onto the contact and support menu and ask us any question through our chat box. We will answer any questions in respect to functionalities, navigation, and methodology. Unfortunately, we will not be able to answer questions on our view on the markets. I'll let you quickly read the disclaimer, and while we're doing that, I'm very happy to answer any questions. No questions? Okay. Well, thank you very much for your attention. I hope you enjoyed the webinar. If you want to send me any feedback, I'll be very happy to receive it. And please, if you have any further questions, don't hesitate to go onto the chat box. Thank you also for the nice comments since I'm seeing coming through at the moment. Okay, well, have a nice evening. Thank you very much. Bye-bye.